Aloha, hey, it's Julie Ziemelis, 365 Hawaii Living, 365 Group, Real Broker, and I'm with today Joe Eagan from Wynn and Eagan Team, and he's going to be giving us our mortgage update. I also have Eric Ziemelis. Eric, introduce yourself.
Hello, I'm Eric. Nice to see all you guys out there in the Never Land.
Real Broker, 365 Hawaii Group. So Eric's out on the lanai tonight, and we are having a storm happening here in Kona today. So we should be wearing sweatshirts and
Yeah, you can see the rain
shawls.
coming down.
Yeah. So it's not a
Yeah,
beautiful day in
it's
Hawaii.
69 degrees today.
Yeah, it's coming crazy. So Joe is greeting 2024 as our first guest of the year, and he's going to be talking to us today about mortgage rates. So let's ask the first question. Eric, you're the question man
The
today.
first big question is, how low do you think the rates are going to go? I've heard all the way up to 4%. What are your thoughts on this?
That's the million-dollar question everybody has, right? Is 2023, unfortunately, we saw rates skyrocket over a short period of time. They were trying to combat inflation. Now, the good thing is, by raising the rates, they did kind of combat inflation. Inflation's starting to come under control. Their goal is to get it to 2%. Before it gets to 2%, they realize that they're going to have to cut back on those interest rates a little bit, right? Or they're going to just slam into a brick wall,
Right.
which they don't want to do. So essentially what they're forecasting is, and depending on what you read, you hear, you see, I've heard 3 rate cuts in 2024. I've heard 5 rate cuts in 2024, and I've heard 6 rate cuts in 2024. So I think it's going to be a little bit more conservative than people think, because I don't think they want to open the floodgates just to have inflation creep back up, right?
Right.
So I do anticipate, a couple months ago, we saw rates at the interest rate get as high as 8%, right? Now, towards the end of 2023 and beginning of 2024, what we're seeing for interest rates is hovering right around that 6.75% on a 30-year fixed, on a conventional loan, slightly lower on an FHA loan. Now, my forecast by the end of 2024, based upon everything that I see, right, and read, I'm estimating somewhere mid-5s by the end of 2024. I don't think we'll get all the way to that 4% mark, Eric, that you kind of alluded to earlier.
I just saw it on the
That would be
internet.
fantastic.
I'm not holding my breath on it.
Right. And if you saw it on the internet, it must be true, right? But I think it's going to be a little bit more conservative than people think, because again, I think the Fed's going to be a little bit more careful to start 2024. There's a couple Fed meetings that we are anticipating rate cuts. There's one going to be at the end of January, which I don't believe they're going to cut the rates at the beginning of the year, right? Then there's another one in March where about 68% of people believe they're going to start cutting rates at that meeting, where I'm a little bit more hesitant on that one. But by June, I do anticipate they will cut rates by then.
Okay. 6 months from now.
So, and then I guess we should also talk about one of the downfalls of having the rate cuts here is with where we are here in Hawaii with such a tight inventory. When the rates start to go down, then we get more competition for resources, since we have not gotten more inventory on the market yet, since we're still low in inventory.
Right. Yeah, it's all supply and demand, right? Everything that you go to buy is all supply and demand. Unfortunately, with rates going up, it's caused a lot of buyers to get out of the market, and they all want to wait, right?
Yeah.
And not many people want to sell if they have a 3% interest rate, which I understand that too, right? Because of where they're going to be going. Home prices aren't decreasing, right? So if home prices are staying level or kind of, sustaining, and interest rates have increased or doubled, then they're going to be paying more for the next home, right?
Yeah, what I'm seeing is that we have the people that we've been listing their homes are older people, and they are saying, you know what, we're not going to get much more equity in our house at this point. There's hardly any inventory. We're going to get the price that we want. We've made a pretty good amount of money, and they're saying, we're done. So I've actually gotten quite a few listings from older retirees who are investors on the island. So getting rid of condos, getting rid of, basically their second home. So at least that's getting the inventory kind of going. But what happens, at least for one of those, another investor came in and bought it. But another one was a woman that lived in Maui, and because of the wildfire, she had to move over here. So that way, at least put a full-time resident into what used to be an investment condo. So, and I've been getting phone calls for people, actually the east to west still is this, people are still saying, you know what, we're waiting for those rates to come down. We want to be ready in a position that when they hit those rates come down, they want to make sure that they're in a position to buy. So I do see people starting to get ready for it. So that's good. Eric, another question for Joe.
Sure. So so the other question that everybody has is, okay, if the rates are going down, should you wait before you get a loan, or should you wait till they, get down to a lower percentage and go there?
Sure. And then that's a good question. That's an honest question to have, right?
Mm-hmm.
The hard part is, if you look at purchasing a home, I always tell people it's up to your current situation. I never tell people it's a right or wrong time to purchase a home. It all just kind of depends on where you're at in your life, what you need. You're going to be paying a housing payment regardless, unless you're living with family or something like that, right? So I truly believe, and I can break down the numbers for anybody that wants to have a consultation on this, where I can show you the cost of waiting, right? Because as we kind of alluded to before, if rates decrease, I read a stat the other day that if rates decrease by a full percentage point, meaning 6.5 to 5.5, which could be doable in 2024, right? If they do that, that brings 5 million more potential buyers into the market. Now, that not all of them are going to purchase, and I understand that, but with the supply issue that we do have on island, they're not really building fast in Hawaii, right? It's very hard to build in Hawaii.
There's building fast and there's not building at all, Joe.
Exactly. Yes. I wanted to be nice and optimistic, but it's really hard to do on island, right? So we just don't have that supply that other areas do have, or the opportunity for supply. So what I would recommend is purchase now, because we do have a little bit more flexibility. Sellers are willing to, and you can speak on this a little bit better than I, Julie and Eric, right? Based upon what you're seeing, you can negotiate a little bit more than years past. You can ask the seller to pay things like closing costs. You can ask the seller to participate in a buy down program that we have to maybe lower the interest rate temporarily and subsidize the monthly payment to keep that payment low. So essentially what I'm telling everybody and kind of walking them through is, I would buy now, although the interest rates are slightly inflated and we know they're going to go down. But what you would do is you would just refinance when the rates go down. I don't want you to wait and interest rates go down and then we have a flood of influx buyers that are in the market, and that's just going to boost competition in an area that supply is an issue.
Right. So people might want to know, how much does it actually cost to refinance a mortgage in general?
That's where
we're talking approximately $3,200.
Okay. And then that just basically gets tacked onto the back end of the loan, or do you have to come up with that cash?
No, you typically, I wouldn't recommend you come out of pocket with cash to refinance. We just roll it into the new loan. It doesn't negatively impact the payment that much when you're rolling in that little amount.
Okay.
So Joe, when the rates go down, at what there's a certain number that it makes sense to refinance, right? But when it drops, I mean, I've heard like 0.25%. Do you have any thoughts on what would be a good? I mean, if somebody were to buy and move forward on it, what would be, where would it need to go down to before they would refi? I mean, what would? Good question.
Yeah, and it depends on your loan amount too, right? Because a percentage of an interest rate on a larger loan amount could, like, let's say you save 0.25% on $1 million loan amount, that's going to have far more bang for its buck than 0.25% on a $500,000 loan amount, right? So typically what I tell people is around a full percent saving somewhere, meaning a reduction in rate, or sometimes it's a reduction in rate plus a drop off of mortgage insurance, or a reduction of mortgage insurance as well. So there's a couple different factors that can play into what would make the refinance make sense financially. It depends on the loan amount, and then it's going to depend typically about a full savings somewhere full point savings somewhere, be it an interest rate plus or interest rate and reduction in mortgage insurance.
Yeah, so a lot of people are not totally familiar with mortgage insurance. Can you do a good 30-second explanation of what that is?
Yeah, mortgage insurance, depending on the loan program that you have, mortgage insurance honestly does nothing for a buyer. A lot of people think, well, mortgage insurance is going to protect me in some way. It doesn't. The only thing it does for a buyer is it increases your monthly payment, right? That's it. So what monthly mortgage insurance is let's say on a conventional loan, the only way to truly avoid mortgage insurance is to put 20% or more down at the initial time of purchase. If you put less than that, what the lender is going to do is they're going to charge mortgage insurance. And what that does is it protects the lender in case of a default, right? So it protects them. The reason why 20%, the more skin in the game you have, the less likely you are to default. So on a conventional loan, if you put 20% or more, they don't charge mortgage insurance. And they kind of tier it. FHA has their fixed set mortgage insurance. They have an upfront mortgage insurance plus a monthly. Where conventional, it's a little bit different. The more down payment you have from 3%, 5%, 10, 15 to 20, plus the higher the credit score, the less they charge in monthly mortgage insurance.
Do you have an idea roughly what the mortgage is? I mean, just to give somebody an idea what mortgage insurance might actually cost.
I mean, if you put 3% down on a conventional loan, it could cost a couple $100. If you put 15% down on a conventional loan, it could cost 30.
Oh, okay.
Yeah. So depending on, again, the amount of down payment you put, plus the higher the credit score, the less they're going to charge on mortgage insurance. Plus, a lot of people think it's a monthly charge, where sometimes we can do it two ways. We can either charge it monthly, or we can do an upfront mortgage insurance and kind of roll it into the closing costs and just have a one-time fee so you don't pay monthly.
Mm-hmm.
Okay.
Interesting. That's an interesting way of dealing with it too.
Yeah.
Okay.
Yeah. So, and that's another thing too in this market, right? Usually what I'm telling people is let's put the minimum down, let's reserve some cash, because more than likely if you purchase now, it's not going to be your long-term mortgage, right? We are probably going to refinance you once the rates dip, and that's more probably going to be your long-term mortgage. So let's reserve some cash, let's earn some, invest it and earn some more with your money somewhere else and help subsidize that higher payment for a short period of time until we refinance. And we may talk about putting more down at that point to have more of a longer term mortgage.
Okay. And just to remind people who are watching this, there is magic in Joe Eagan. He gives this great strategic experience around how to make your money work for you. And you know, I'm gonna use what I'd like to do is tell you guys, like in the next 6 months, that we're trying to also buy an investment piece of property in Oregon. And everything you're saying is like we're gonna use. And the concept of knowing how to just wiggle your money around to make it work for you so you can get into things you might not have thought you could have been able to afford. And then so with that, we're talking also about consumer credit debt, that we have hit the one place I saw it said $1 trillion of consumer credit debt, and another one like the St. Louis Dispatch said like $17 trillion. I'm like, is it 1 or 17? But if you are in a problem with some consumer debt, is it best to try and put it all together before you go and try to get a mortgage? What do you think?
So there's no right or wrong answer to that. Honestly, it just kind of depends on what I look at. And I'm just talking from my own personal standpoint. If I were in that position, what I would do, I would take a look at my credit cards, right? If I had multiple, obviously in this scenario, we're assuming we have multiple credit cards that we're having trouble with. High interest, you know, not only is credit debt at an all-time high,
Yeah.
interest on credit cards are at an all-time high, right? I mean, we're talking 20% or higher on typical credit card debt.
Mm-hmm.
So the biggest thing that I would do is I would take a look at that and say, okay, if I can consolidate it somewhere else, am I going to be able to lower my interest on that debt, right? That's the biggest thing that I want to do. Typically, if you consolidate it, dependent on the bank you go to, it is going to be a better option for you if you can consolidate it into one lower interest debt that you can attack more, you know, quicker, right? More quickly. So typically, I would tell you, yes, it's a good idea to do that.
Mm-hmm.
from a credit standpoint or credit, it can impact your credit
Okay, negatively,
from
I
a
take it.
favorable, no, from a favorable standpoint. So if you pay off a credit card
Uh-huh.
and you subsidize it or you put it into one debt, let's say you have 5 credit cards with balances on it, that's going to look negatively dependent on how much balance you have to your credit limit, right? If your credit cards are maxed out, you can consolidate it over to one debt. I would do that, and that would have a favorable impact on your credit score because it's going to free up more available credit to you,
Mhm.
which will help increase your credit score.
Now, do you
Now,
close down those 5 credit cards? No, you don't do
ideally,
that.
no, right? If you close down an account, that can negatively impact you because that credit is now done. So that's not going to help you. You want more available credit available to you. Even so, no, I would never close a credit card unless one thing, they charge an annual fee just to keep the card, right?
Mhm.
That actually happened to me personally. Is I had a card, I didn't have a balance on it. The end of the year, they tacked on like a $32 charge to have the account. I got the statement, didn't even look at the statement because I'm like, I don't even have anything on it, right? So I just threw it away. And then they were contacting me for a late payment. Now I was able to get that reversed, right? But I would never keep a card if they have a charge to keep it, right? Then I would close it. If not, then just keep it and keep it open. I would cut it up so that you don't use it,
Don't do it.
right?
So yes, we've heard
Super
many
saver
stories
players
that
to Hawaii.
people leave the card open and they go
Yeah.
start spending on it again, and then you've doubled the amount you've spent instead of making it better.
Right. So I would cut them up, but I wouldn't necessarily close them. Again, it doesn't mean you use them, just keep them there. It's going to help your credit. I also recommend people take credit increases, right? A lot of time their credit card companies are going to call you to get credit increases. And people tell me all the time, Joe, I didn't take it thinking it's a good thing, where I'm like, well, from a credit standpoint, just take it. Doesn't mean you're going to use it. As long as you're disciplined to not charge on it, it's not going to negatively impact you, right? It's
Oh,
only
it's like
going to negatively
gambling.
right,
It's the worst.
right. But I mean, if you have a $3,000 credit limit, they want to increase it to 5. That's actually a good thing. It's going to help your credit because there's more available credit to you. Again, don't go out and use it, but I always say take the credit increases too.
Yeah, that's good. Okay, that's good advice. Okay. And then what was our other question for him?
So the question is, other questions are, do you have any predictions of what, what is there any new and exciting things that are happening? And you guys always come with new products and things like that. Is anything new for 2024 that people might be interested in?
Yeah, there's a lot of the biggest thing that I'm finding in Hawaii is just the conforming loan limits. They've increased the conforming loan limits in Hawaii to a standard like conventional conforming loan. You're looking at a loan amount of 1,149,825, right? What that means is you can literally buy $1 million property and only put 3% down if you wanted. Now that's obviously more you're borrowing, more of a monthly payment, right? But that's the biggest thing that I've been running into in Hawaii is being able to leverage your money somewhere else, get in with minimum down payment in a high interest rate environment, knowing that we're going to refinance you down the road, is that you can get in with minimal down on a higher loan amount. The cat wants to make an appearance.
You want to see the cat? Just everybody. That's
their
Moose
shark
V.
kitty.
There
Yeah.
you go. All right. Bye-bye.
Yeah.
That's cool.
Yeah.
Okay.
But yeah, so wait, back to the limit. There was a time that it was incredibly low compared to what the houses costs were. So you could, I mean, a conventional loan was just not obtainable for a long time here, and it caused a lot of
Well,
problems.
that's FHA. FHA
Yeah.
still in Hawaii. It's been a battle in Hawaii because FHA is kind of that lower credit, just kind of first time home buyer. It's easier to get in, easier to qualify. The loan limits there are still low comparatively speaking. It's just like they have to realize that buyers can't use this program because there's no houses available, right?
Yeah.
For that particular price.
Do you
So
know what the
FHA still,
the limits are on the FHA?
so it's 517,200
Yeah.
Some
for a
houses.
single family home. Yeah. So east side of the island,
Yeah,
right?
exactly.
We've
Exactly.
used the FHA. There's also USDA. There's USDA eligible areas still on island, right?
Mhm.
And then conventional VA. VA is also a great loan program that's out there. If
Yeah.
you're a veteran, you possibly get in with not putting any money down.
Yeah.
So
Yeah, but you know what's interesting in Kona, I've had a couple of my people who've used VA, and they're saying the appraisers for VA,
I've heard that too. There's like two
horrible.
appraisers on island, and
Mhm.
I've actually talked to VA specifically myself because I've had buyers that the seller did not want to accept their offer because they were afraid of these two VA appraisers coming in low with value. And I was just like, that it just defeats the whole purpose of a veteran, and the perks of a VA loan.
Right.
So that is something that they are aware of and working on. VA honestly is the easiest loan to qualify for.
Yeah.
There's this common misconception out there that no, when nobody wants to do VA, or it's they look at the home and they're going to have their requirements. Now, they do have health and safety issues, but that's very typical. And Fannie Mae and Freddie Mac conventional loans have actually started to catch up with health and safety issues, just like VA and FHA. So it's actually the
Good.
easiest loan to qualify for. It's just the two VA appraisers on island.
All right, and they take a
Joe,
long
can you
time.
give a couple examples of health and safety issues that they might find?
Yeah, let's say if there's one, like the biggest thing is peeling and chipping paint if the home was built before 1978. They state that it has lead-based paint, that if a child were to eat it, that would be hazardous, right? If there's a stairwell without like a handrail, that's going to be a health and safety issue. So just things like that.
Okay. Yeah. This is, I just feel like we were just talking to these people. In fact, we are helping them, the Padres, coming into a house that they were looking for VA, and they were looking at one house in particular, and they thought, okay, we can do it. And then the sellers found out that it was going to take months to get the VA to go through. And of course the seller said, I'm not doing that.
That was transferring the VA is what that was.
Yes, yes.
That was a whole
Oh, that's right.
nother.
So that's an
assumable
assumable
loan.
loan.
That's it. That's it.
Yes, yes.
Yeah.
So
And that
that's
was
where
not just,
if the seller is a VA loan, and same for FHA and some conventional loans too, and that's a perk where if the seller has an interest rate of 3.25, somebody can come in and assume that loan, right, at that similar rate. However, the original bank has to be able to approve that, which takes months.
takes months. Yeah, which is like, so yeah, I mean, that might work in a really, really bad down market where you can't get the house off the market, but not here. So,
Right.
We do have a
Yeah.
couple of people on the call. Do you guys have any questions for Joe? I know that one of our people here is a new person coming into the 365 Ohana experience and is looking for a home here on the island. Do you have a question? Do they get free money for houses? Well, no, they don't.
It's been very educational so far. So I'm listening and learning and forming questions in my mind as we go.
Okay. I'm not calling you out, Jesse.
Yeah. Jesse and I talked for a while, and she had great questions. We talked for about 45 minutes the other day, and it was a great conversation. So yeah.
Okay.
Yeah.
Joe, and speaking of that, are you getting more phone calls from people looking for home loans right now compared to last year when it was really slow? Are you seeing an uptick?
I am starting to see an uptick, yes, which is good, right? I think people are starting to get used to the new norm in rates. Again, I think it's hard because as people, we're wired to compare over a short period of time, right? So a lot of the younger generation thinks they should get an interest rate in 2s and 3s, right? And get a home, and that's typical where that's not the case. That's not historically where interest rates are, nor will we ever probably see them in the 2s or 3s, barring something, right?
Right.
So
That ruined the economy. So.
Exactly, yeah. So I am starting to see an uptick a little bit in people that are, okay, this is the year where they're going to buy, they want to be ready. Again, contact any lender, obviously, hopefully me, right? But just to get the process started, get ready, because again, I do anticipate when rates go down, there's going to be an influx of buyers that are going to come into the market. And then in Hawaii, as we all talked about, there's just not that supply there yet, right? It's going to take significant time to be able to get there, but so there is going to be that competition, and we've lived through it over the last couple of years where you had to overpay, you had to waive inspection, you got to overbid, waive appraisal. So
yeah. And one thing that we talked about this too, is that sometimes a seller won't let you even in the house unless you have a pre-approval letter.
That's becoming really normal now in Hawaii. Yes, they have to have a pre-approval letter just to even schedule a showing.
Right, because what's happened, I think, and we've actually had this, I think we're getting an uptick. We have 3 people coming in the next like 6 weeks whose main focus is to look at houses and look at neighborhoods and kind of get ready for it. And of course, they want to go look at houses, right? Well, they're not really in a position to buy yet, but somebody has to clean up that house to be able to say, oh, sure, you want to see this house. And so we're trying to see what open houses look like, but this like, let's just go ahead and take a look. But we're going to buy like 5 months from now. It puts the seller like, well, you're not really a strong buyer because you don't really look like you're going to buy right now. But at least if you have pre-approval, it looks like if you found the right house at the right time, you might buy. And we have a couple of those kinds of people too. But there's that, especially in Hawaii, which is smart, show up and find the neighborhoods and look what you want to do instead of coming here with no idea of what the Hawaii Island looks like, and decide that you're like, we had a guy that, called today. He's never been here. He's like, oh, I can afford East Hawaii. Have you ever been there? No. Like, hey, you might want to go. So he's going to come and do kind of a fact-finding mission, which I told him, go for it. But while he's here, he's saying, you know what, if I find something, I might actually buy it when I'm there. I'm like, oh, okay, but make sure that you actually are set up, like telling you guys out in YouTube land, making sure that you're set up so that if you did find the dream house, you can make a move on it immediately. And also knowing what you can be looking for in terms of your price range, because Joe's going to tell you what you think you could qualify for might not be the truth until you get pre-approved. And then also having the realtor have the assurances that you can actually afford the house that you're going to try and make a bid on. So those are really
right.
And that's another thing too, and even Desi and I had this conversation the other day. When I issue a pre-approval, it doesn't expire as long as nothing majorly changes on your end, buyer's end, meaning you don't lose your job, heaven forbid, quit your job, buy a brand new Mercedes. That can happen day 2 or 122. Something like that happens, it's going to impact the pre-approval. But hopefully things just get better in time, meaning you get pay raises, you pay off debt, you save more, right? So for the pre-approval, it doesn't expire. Again, as long as nothing majorly changes on your end. So I would get in and get pre-approved, know what you are approved to look at, right? Because that's inevitable too, because let's say you're looking at $1 million properties and you're only pre-approved to 500,000. The $1 million properties are going to look way better than the properties at 500,000.
And you got to figure out where you're going to move now that you're not going to live in West Hawaii. You're going to be doing like something someplace else with that price range. Eric.
So Desi has a question about, she's got a question here for you. It says, how about if interest rates change after the pre-approval?
That is something that has been happening over the last year, right? I had people that were pre-approved at the end of 2022 that went into 2023, where I had to reach out with interest rates increasing so significantly. That is something that I do monitor, that if they go up so quickly, that I have to readjust the pre-approval, because that's going to impact the amount you're qualified for. So that does play an impact. We can't lock in an interest rate until you go under contract on a property, meaning you submit an offer, they accept, right? So that is something that I do monitor with all my pre-approved buyers and I had to really look at that through 2024 with interest rates increasing so quickly over a short period of time, that I was like, okay, here's what we're looking at. And that's where, once I pre-approve somebody, I'm checking in periodically all the time, right? Because I want to make sure, I don't want it to be a surprise. I don't want to assume people know that interest rates are going up, right? I want to have that communication with my buyers, say, hey, Desi, interest rates went up 0.25% over the last month. This is going to really impact your purchasing power, right? So instead of that $500,000 purchase price, now we're looking at $475,000, right?
Yeah.
So those are conversations that I have. Now, hopefully over 2024, it's going to be the reverse,
Yeah.
right? Where, hey, interest rates went down and now you
You
can
can
afford
afford
more of a home.
more. You
Right.
get an extra bedroom. Woo!
Right. Yes.
So, Joe, the other thing that comes up a lot here is that we've got some people that go online and go try to look for a loan to some of the bigger companies that are out there online, and we've got some issues that are specific only here to Hawaii that sometimes they miss, and there's some problems with it. Can you give a little bit of a talk about that one?
Yeah. So that's hard, right? Because not every lender is created equally, unfortunately. You think, you're very well qualified. And the hard part is if you're very well qualified, you shop around, find a good lender. But the biggest thing is, especially on island, is there's a lot of things that can cause hiccups throughout the property. There's lava zones. Condos are, a whole different animal than anywhere that I lend in the country. In Hawaii, it's a completely different animal, right? So you definitely, and the biggest thing too, and especially you guys can talk about this, is they want somebody that, has a local presence, that knows all the pitfalls that can happen in Hawaii. And essentially, we've been working together for the last couple of years and we've done transactions together. We just closed one today. I can anticipate on island what's going to happen typically. I can't anticipate everything, i.e. inspections, appraisals, things like that. But you just want to be careful when you're the big people that are just online don't know all the ins and outs of financing in Hawaii. It's a completely different animal.
Mm-hmm. Yeah, that's true. Yeah, and congratulations, Joe, and to our wonderful buyers who Joe helped today. When they closed their loan today, they're walking and getting their keys on Friday. So
yeah, we did a walkthrough today. They're very excited. They're going to be they're literally moving in on Friday, and they're to be able to do that is just it's great for them.
Yeah. And the last two buyers we've helped together, we've actually closed them early, which is even better.
Yeah. Because they were so well approved to get so that we can move that loan along so that we can move the project faster too. So, and I don't know if if you guys are watching this, there is a way that you can actually, if you have all of your ducks in a row and things are moving quick, really nicely, we can get the loan closed early and you can actually close your home sooner so you can get into your new home faster instead of 45 days, which usually is how long it takes in Hawaii. So, thank you for helping us close that deal. We appreciate it.
Lori has a question over. She says, can one offer be viewed as a stronger than others solely due to the lender that they use? And the answer is, unfortunately, I have seen it. If you know that there's a stinker lender that is hard and it's going to do it versus somebody that they know knows Hawaii and everything else, that they might be inclined to go with a lender that they know and like versus one that could be difficult.
Yeah, I've talked to listing agents. Obviously, I call behind typically every offer. That I like to call behind every offer just to talk to the, Hawaii is kind of a small market, right? Typically, everybody knows or has worked with us or known somebody that has worked with us. So I've actually talked to a listing agent where they said they're going to accept our offer because of my pre-approval letter over another offer that was slightly higher from a bank that they didn't know.
Mm-hmm. Yep. And I had that happen where I accepted an offer and I said, what bank is this? And the seller said, or the buyer said, this one we have in the mainland. And I'm like, oh, I think you should get an online, on island lender. And 2 weeks into it, they changed lenders. And then everyone was scared because it's now, we only have, 25 days to get that loan. And they realized they had made a mistake. And so, don't be that guy, because then all of a sudden everything starts to get very stressful in the middle of an escrow. So, having people who understand this, the ins and outs of our state are important. Do we have anything else? Trying to keep this to
no more questions.
5 minutes. Okay.
I thought we covered a lot of good information today, though. Definitely, a lot of good things for people to know.
Yeah, and so
that
you
was
guys
great.
know too, the if you're still with us, is that Joe meets with us on the third Thursday of every month. We do an island-wide real estate update and mortgage update, and Joe throws in what's going on with the rates and what's housing happening with the mortgage experience. And so our next meeting is actually the 18th. And if you guys want to keep track of these, like I said, the third Thursday, and as Joe is saying that he's keeping an eye on what the you know, it's not, is it the feds? It's not the feds. It's the people in charge of the money.
Yeah,
The reserve
the
interest.
feds, yeah.
Feds, okay. So it sounds like they might go down in March, maybe not, maybe June. So if you guys show up, you guys gonna figure us out, because we're gonna be able to let you have an extra bedroom if it works out for you. So and so
Well, I'm excited because 2023, I was like dreading these because I'm like, well, I got the bad news again. So hopefully
always-
2024, these
Yeah.
go a little bit better.
yeah, so every time we meet with you, you're like this, you know, getting it like the little thing exploding behind your head. Yeah, we're going down an extra, you know, quarter of a percentage
Right.
point. So
Right.
thanks, Joe. We really appreciate you bringing this today, and especially
Thanks for
because
having me.
it's New Year, money's everything. So and again, for the people who are on live, thank you. If you do want to join us live, if and you know don't have a realtor yet and you want to join our group, we release the Zoom link in our Facebook group, which is 365 Hawaii's I'm moving to the Big Island of Hawaii and buying a home group. Or you can simply email me, and I will also get you the links that you need to be able to come in live and ask questions and get more information directly from Joe and our realtors. So thank you, gentlemen, for your help today, and we will see you guys on the next go round. And again, you guys, thanks for showing up today, the ones who are here on live, and we'll see you on the next round. So aloha, and make sure you subscribe to our channel. Aloha.